Is the U.S. going into a recession in the next 12 to 18 months?
Well, the U.S. is definitely going to a recession. I don't know if it's going to be
in our lifetime, yes. In the next 12 to 18 months.
Yeah. I think the global economy is slowing. I think the U.S. economy is slowing. I do expect to see slower growth. Whether we have a recession in the next 12 to 18 months, I'm betting against it. I think we will still see growth in the next 12 to 18 months. But there's no doubt we're slowing. We will eventually have a recession, as we always do.
You know, Matt, to Steve's point, the transports appear to be sending up a big red flag. I know you're a little nervous about equities. How much does that, the Dow theory, the transport theory, play into that?
Oh, yeah, I definitely agree with what Steve is saying here, because this is something we've seen. This is not just something that we've seen in the last week that as Steve is talking about. This has been happening for over a while now. And that tells us that it's not just because the President Trump just announced another round of tariffs against China. So, you know, as we move towards this, I mean, two things. On the stock market, whenever the stock market goes down to, because of new news, new negative news, like we did just 2 weeks ago, the initial low is rarely the first low, is rarely the ultimate low. We usually see some sort of a short covering rally to work off the oversold condition, and then we sell off to a new low. And what Steve is talking about here, what does that mean for earnings? You know, the second half, the July earnings, okay, guidance after the July earnings reports actually went down slightly for the third and fourth quarter. And with now this new negative news coming out, keeping capital expenditures down and things like that, it's going to be tough for us to see a big improvement in earnings. So it's kind of a double whammy there.
Matt's right. For the Cass freight index, about the 8th straight months of negative year over year. I want to just take your metaphor, but you said red flag. I think it's flashing yellow.
Okay.
And the reason it's flashing yellow and it could still go green.
Slow, don't stop.
Is it's kind of a weird juxtaposition, but it's the U.S. consumer against the trucks, right? Which is essentially the consumer part of the economy, which is held up relatively well against the industrial side of the economy, which is going to slow down. It's going to slow down because, as Matt suggested, global economic weakness that I think is made worse by the tariffs.
Okay, let's, Vahan, hold on. I want you to listen to something and then respond. Okay. In the previous hour and halftime, a guy by the name of Carl Icahn, you might have heard about him. Great long-ranging interview with Scott. They talked about interest rates. Now, the president has said he wants the Fed to cut aggressively. Carl Icahn says this: I don't think just lowering rates is the answer, the end-all answer. If it was that easy, you would not have these cycles. Do you believe that we need to cut interest rates now?
No. In fact, I believe that the last interest rate cut was not necessary. The Fed reversed itself after only 7 months, which is a bit unusual in itself.
It was a mid-cycle adjustment, if I'm right, Steve.
Well, it's a reversal as far as I'm concerned. But I think the interest rate cut sends some troubling signals. It makes it look like the Fed is unsure of itself, that it's not sure it's doing the right thing, and it also makes it look like it's capitulating to the demands of the president. I think it sent a very bad signal to the market. Now, I know that interest rate cut was already priced in. Everybody was expecting it. Some people were hoping for more. But I think it was a mistake to give the market this interest rate cut. It signals that either the Fed doesn't know what it's doing or it knows that things are much, much worse than it's saying.
But isn't that, Matt, the problem is that even if you're Jerome Powell now, and I'm sure Steve's got a point of view on this, and maybe you're thinking you want to cut rates in September or December, but now you've got this political pressure from the president, it's almost like you can't do it because it will look like you caved. Do you think the market needs an interest rate cut?
Well, it's so true. I mean, it gives a whole new meaning to the term between a rock and a hard place, because if what President Trump is doing for maybe political reasons in terms of the trade war slows the economy down, whether it's political or not, the Fed needs to respond. So they need to be strong enough to respond, even though it looks like that it shouldn't be what they're doing, or it looks like they're responding to that. But my real concern is that what we're seeing is that a situation where the stock market is ahead of the fundamentals, and it's going to go a little bit lower, and I think we'll go into a full-blown 10 to 15% correction before this is over.
Wow.
But that will provide a great opportunity to buy.